Good morning, everyone. It's Friday, June the 26th, and welcome to 7 Investing Live. This is our live stream event where we highlight several of the stock market's most innovative opportunities every Monday, Wednesday, and Friday. You can follow along here on our YouTube page or also at 7investing.com. My name is Simon Erickson. I'm the founder of 7 Investing. I'm joined by Heather Horton, our executive producer of the show here today. We are going to be talking again about Rocket Lab. This is a popular stock right now. It has skyrocketed. It has skyrocketed into outer space in terms of its stock price earlier in the year, and then it's come a little bit back down to earth here recently. You can see the chart in the background peaking at nearly $150 a share. Now we're back down into $83 a share as of this morning. That's quite a delta, Heather. We've talked about Rocket Lab on the way up, and now I think it's only right for us to talk about it on the way down. Before we get into that, though, I do want to point out that it wasn't that long ago we did discuss Rocket Lab's valuation. In fact, just back 3 weeks ago, we published a show on Rocket Lab. We reviewed its first quarter results, and then we went into the trenches and looked at the full discounted cash flow valuation for 2026. Again, that was earlier this month, Heather. Before I get into this, I actually think it'd be kind of fun to ask you what you thought about that conversation. There was a lot in the trenches, a lot of numbers, a lot of objective analysis, but just bigger picture. How do you feel about Rocket Lab, and how did you feel about that last show we filmed 3 weeks ago?
I hadn't really researched Rocket Lab a whole lot until you and I started talking about it, and I really enjoyed that last show because going through like your process, the deep dive, all those spreadsheets. There's a lot of spreadsheets, and but seeing all that, there's a very concrete number behind what you think it's worth. You're not just pulling it out of nowhere, it's not just I don't think it's worth that. You have a set amount that it's probably worth, and there's always room in the stock market for some flexibility, but I really enjoyed seeing like your thought process and the concrete kind of range we should be in for Rocket Lab, and I really enjoyed that versus like vibe investing, which I feel like has gotten really popular. That's what I'm gonna name it and call it. Or people like a stock, and so they buy it. And I've been guilty of that. Like, there's plenty of stocks I own just because I really like the company. But we were seeing so much, just it was skyrocketing. We were seeing so much variability in the market. And with the SpaceX IPO coming up, we were just watching Rocket Lab skyrocket. And I think that there was a lot to be said for the volatility brought in by the excitement over the SpaceX IPO that obviously was going to drop down as the SpaceX IPO happens and then stabilizes, which we're watching happen currently. And it is really wild to say, like, I don't think it's worth that. And then watch 3 weeks later when it almost halves in price. Like, you were definitely on the money. And it's been kind of fun to see that in such quick real time.
Yeah, thanks, Heather. I completely agree with that. It's really a perfect example, almost a quintessential example of showing how the stock market does what the stock market does. Um, when we look at how we think about valuations of companies and price targets and sell side analysis and stuff like that, there's a lot of spreadsheets that are being made out there in New York City. And I know this because I was almost an investment banker before I went to the resale side of it. I was almost one of those investment bankers in New York City. No interest in putting in the hours that they put in, by the way. But I could see the process, and I got familiar enough with what goes into that work, that quantitative work of forecasting and understanding businesses and getting into the trenches and just discounting back cash flows and saying this is the price target I come up with. And you see those all the time. That's kind of how institutional investing works. That's how the sell side of the investing business works. And when Rocket Lab, shortly after it came public at $10 a share through its SPAC IPO, really sold off as we saw a lot of challenges in the market, just in the way that companies were raising capital in 2022. Interest rates went shooting up for capital intensive businesses like Rocket Lab. That became very difficult to get some financing. Luckily, they raised money at the right time, but the market still punished them anyway. And we saw it fall down to $4 a share. And objectively, that was completely undervalued. We knew we were pounding the table at 7 Investing saying this is an opportunity that we think is worth 26, 27, even $30 a share. There's a big disconnect between $4 a share and $30 a share. On the other hand, there has certainly been some optimism and some glass half full narratives about this SpaceX IPO in particularly, that everyone just thinks that Rocket Lab is just going to continue continuing to grow forever. And, I think that the expectations here recently have gotten out of hand. And so on the other side, versus Simon the Bull pounding the table at $4 a share, you and I kind of came out there and put the opposite message out there last month and said, hey, at $150 a share, we don't think this makes a lot of sense. Let's make sure we're being grounded in reality and looking at those spreadsheets. Spreadsheets don't tell the full story, they're not always the final answer. But I do think that when we're investing, you should keep a level head, keep the analysis part of it at least in the back of your mind whenever you're buying a stock or even holding on to a stock that you already own. We're not encouraging going crazy and buying at the super low point and then selling at the very top and trying to manage the volatility. The market doesn't always match what the spreadsheets tell it should do. Companies are going to do their thing. This is a giant auction at any given time. But I do think that the analysis that we've done at Rocket Lab, again, a perfect quintessential example of the market doing what it does. And that chart that you just showed, the stock price itself, perfectly representative of kind of the pessimism down there in 2022. As you can say, the stock's selling off down to $4, $5 a share back then when interest rates were very high, and then up to $150 a share as we approached the SpaceX IPO earlier this year. I don't want to rehash our last conversation, but I do want to get a little bit into the model itself and point out maybe three key takeaways that I have on where we stand with Rocket Lab today. I'm going to go ahead and share it here in a moment, but before we jump in, Heather, did we miss anything? Is that a good explanation of kind of where we stand? And what you and I have been looking at this company for a long time now. Is that a fair representation of where we stand status quo with Rocket Lab here today?
Definitely. And I do think, it allowing some level of just interest investing is perfectly a good thing. It's a great thing. But when the valuation is so far from where things are currently, I think that's when you need to kind of be thinking a little more analytically about it and not just investing on emotion. But also, I think Rocket Lab will get back to these highs at some point. I think it's a really great, interesting company. I think it's just you're limiting your amount of upside when it was so high. And if you were interested in it, it is now much cheaper, and so it's
Yes.
worth a reinvestigation. It's still above where we looked at it, but if it's something that you're really passionate about or really interested, I don't think it's wrong to get in a little bit, even if it is above valuation.
Yes.
Um, Sometimes it's just good to get in on a company, watch a company, be invested just a tiny bit, and there's value in that past your gains. And I think that's a perfectly fine time to buy in on a high valuation, but it is always worth really watching and don't throw in the basket if something seems wildly out of range.
Yes, and one last point before we get back into the numbers again is that, when we come out there and say that Rocket Lab is overvalued at $150 a share, that is nothing against Rocket Lab, the company itself. We aren't coming out and saying, "Oh, this is a bad company," or we're selling the stock or we're getting out. It's nothing against the business itself, which is phenomenal and it's got a huge growth opportunity ahead of it, amazing growth opportunity ahead of it. This is simply a reflection on what's going on with investors. Rocket Lab has no control over what its stock price is going to do out there. It can announce how it's doing. It can go out PR announcements and public results on its earnings and things like that. But the market is going to do what it's going to do. This is more of an understanding of kind of where the stock is priced and what's going on out there. So again, Heather, when we say that we were diligent in this analysis, that might be the understatement of the year for Seven Investing. There are tabs and more tabs of spreadsheets upon spreadsheets on what we predicted on what's going to happen to Rocket Lab through fiscal 2041. That's kind of what the DCF is. You forecast as far out of a window as you can reasonably do. You discount those back to the present. You come up with ultimately a free cash flow valuation, and then you compare that to the stock price. We're not going through all this again, but there is three key points that I think that are worth repeating for investors that are going to really matter in this. And the first one is, Rocket Lab has got kind of right now two divisions, launch and space systems. I want to point out the importance of space systems. Uh, we tend to think of this company just as launching, small satellites into orbit. That was kind of how they got their start. Now they're building a bigger rocket that will launch more constellations. And that's the launch side of the business that we kind of got used to talking about. I think the much more important piece of Rocket Lab is going to be the manufacturing of those satellites and the full contracts that they're signing, especially with military and defense organizations. This is right now about the majority of the business today. I think it's actually going to get closer to 85, maybe up to 90% of the total backlog and the total revenue that Rocket Lab recognizes by the end of the forecast window. Because the contracts are so much larger than just the launch itself. The launch is an important critical piece of that. You got to put the satellites out into space, but the value of creating those satellites, manufacturing them, and signing the long-term contracts is going to be an order of magnitude larger than the launch business itself. And so the first thing that I want to take away is, we've put a pretty healthy expectation of backlog into the expectations we meet. I can't really let me pull this back out just a little bit so we can kind of see from fiscal 2026 where we are today and the forecast window going forward. We've got visibility into maybe the next 5 years of contracts, right? We know that they're working with the Space Defense Agency. We know they're working with NASA. We know they're working with the Department of Defense. There's contracts we can see, and we can kind of break those up into a year by year backlog of how quickly Rocket Lab can get through them. But we also know that there's going to be more contracts in the future that haven't been defined yet, right? Rocket Lab doesn't know the value of the contracts it's going to recognize in 2031 to 2035 yet. So we've got to make assumptions about how those are going to look. In the last DCF that we did when we ran through this last month, we kind of baked in a lot of these numbers that we had right here for the next 5 years, and then made what I think are some pretty optimistic assumptions about the $5 to $6 billion of current revenue that's going to be recognized from that backlog of contracts at the end of the decade and beyond. So my takeaway on that is we are not being overly conservative when we're estimating the value of those contracts and the impact they're going to be making to space systems. I actually think this is a pretty aggressive forecast we've already put in place, with the backlog, in my opinion, jumping from $2.2 billion in total backlog that we saw here in the first quarter of 2026. I've already estimated that's going to be nearly doubling to $4.3 billion by the end of this fiscal year. And again, Heather, before I get too far ahead of myself on this, I do want to just point out, that's an important piece of the valuation, is estimating that backlog. I think we've done a pretty good job thus far of looking at the contracts they have in place and then kind of, putting that going forward, not linearly, but actually, stepping it up quite a bit here in the years going forward here.
It would help if I unmuted. Yeah, I think the really important thing that I took away from this was that you were being optimistic in your numbers, and we still came in under, as we'll get to.
Yep, very hot. Thank you to Covert Big Bet, for saying hello. We support you in the chat. Really appreciate it. Thanks for tuning into this show. I want to use that as a segue into the second thing that I think is still a key point. Again, we're going through line item. You see a spreadsheet behind me. We're not going through all of those. But one thing that is really important here is how quickly, point number 2, how quickly is Rocket Lab going to scale its businesses and start recognizing operating leverage? This is a business that has a lot of fixed costs, right? You got to have teams of people that you pay salaries. You've got to have facilities to develop the new rocket in. You've got a lot of overhead costs that are associated with, a lot of times, people costs as you're developing new rockets, as you're working through contracts that you've recognized. This is just kind of a heavy cost business. But Rocket Lab has done, in my opinion, a fantastic job of scaling those costs in a way that you're getting higher profit margins. And one of those that I've noticed is just the way that they're recognizing their headcount, and they're actually reappropriating a lot of it. They used to have a lot of headcount that was kind of associated with R&D and overhead of the business, sales, general, and administrative. Interestingly, even as this business is growing, you have seen both of those numbers decline. Their SG&A headcount and their R&D headcount both declined from where they were in fiscal 2025. Rocket Lab is growing very, very quickly right now. How would you see the headcount decline from this? And the answer is they're actually putting this into production headcount instead. They're moving those people that were working on R&D research and development before into production mode, and they're recognizing that as a cost of goods sold on that line item. So this is a little bit of accounting. Maybe this doesn't matter as much on where you're recognizing it, whether it's cost of goods sold or whether it's an operating expense further down the income statement. But it is worth pointing out that Rocket Lab, when we're looking in terms of things like gross margin or operating margin or the scalability of this business, it's not exactly apples to apples as it was in previous periods. They're kind of moving around their own personnel and their own cost structure to reflect that there's going to be capturing a lot of these costs in the cost of goods sold line item rather than in the operating expenses line item. And that's really going to matter because also in cost of goods sold, the cost of launching the rocket itself, the reusability of the rocket itself. I mean, this is something that we're going to have to continually keep an eye on, understand what's included in that line item, because it's a really important one going forward. But I also think equally as important is that Rocket Lab's done a good job of kind of maintaining a lot of growth with limited people that it's bringing into the business to support that growth. Really, really good job. The business is doing a good job on the operating expenses line item. Any thoughts on that, Heather, before we jump into point number 3?
Yeah, I do also think it's interesting watching them move people out of R&D into production means that they're hitting a new kind of phase of business as far as they're seeing how everything is working. And I think that's interesting.
Yeah, and it's a discretionary call, right? This goes all the way up to the CFO. Adam Spice is saying, "Hey, we're getting to the point that Neutron's about ready to hit the pad. This is not just an R&D project anymore that we're working on facilities. We're actually building this giant rocket that is going to carry a much larger payload. Let's move it into the cost of goods sold." And then the last one, this is one that's always a subjective call, but you can't have data to back it up, is what is the interest rates, excuse me, what is the discount rate that you want to discount your cash flows back to? So, when we're building a discounted cash flow, we can kind of see the losses that we've had in historic years that are going to be turning into positive free cash flows. And as the business kind of scales up here, as Neutron starts kind of getting to scale, this is where you want to make a discretionary call of what is the correct weighted average cost of capital that you want to use as your discount rate. Rocket Lab amazingly has used limited amount of debt. There's very little debt on the balance sheet right now for such a capital intensive business. How do they do that? How do you build rockets and you don't need to go out and take a ton of debt? Well, they went out there and they raised $770 million back in 2021, right at the perfect time to raise it, right? Elevated valuation, put that on the balance sheet. And then what happened in 2022 and 2023? Interest rates went up. A lot of these businesses that were not as scale, not end-to-end businesses, they were a little bit more niche in what they were doing, were either facing bankruptcy or really, really kind of financially in tough, difficult times. Rocket Lab went out there and acquired a lot of them, brought those capabilities onto its own space systems divisions. Now it's able to do not just the rockets construction of the satellites, but also the other things, the solar arrays, the positioning, the things that would actually put the rockets in the right places where they need to be. A lot of the mechanics that are working on those satellites and the payloads themselves, they now have those capabilities. What does that mean you can do? You can go out there and go and bid on larger contracts. They did that really, really well. They also have an at the money equity offering program where they can go out there and if they see that their stock price is very elevated, like they did earlier this year, they can actually issue equity and bring that onto the balance sheet, bring cash on the balance sheet to do whatever they need to do with that. So I think the programs they have are very appropriate, but still Rocket Lab is predominantly equity funded, which is at a higher discount rate than debt funding typically is. When we look at the weighted average cost of capital, that's what you see in the yellow here. You can see the cost of equity is much higher than the estimated cost of debt. I think almost certainly we are going to see Rocket Lab, who has used convertible debt in the past. We know that they had warrants associated with the SPAC IPO itself. We know that they have the at the money equity offering that they're offering right now. I will expect that we're going to start see them tapping the debt markets much more frequently in 2026 and 2027. Why? Because debt capital is cheaper than equity capital. You now have assets in the ground that you can use to achieve better debt rates. When you're borrowing from people, if they say, "Hey, you've got some assets now, you've got a credible operating history. If you're profitable, you're going to get more attractive rates." I estimate that the cost of debt, at least what they've got out there right now, is closer to 5 to 6% versus the cost of capital in the equity markets. That's the long-term returns of the S&P 500 over the last 50 years of 10.3%. You could argue that could even be higher than 10.3%, right? Rocket Lab is perhaps a riskier company than a lot of the companies in the S&P 500. But again, depending on the discount rate that you use, this will directly influence the valuation itself. So right now, we're at a weighted average cost of capital of 10.3%. Again, a discretionary call based on the analyst that is building the DCF. You could argue that that could be higher than that. You could argue that that could be a lot lower than that. I do think Rocket Lab is going to tap the debt markets in the future years, bring down its weighted average cost of capital, and we might start using a discount rate of 8 or 9%, maybe even 7% in future years, which would directly boost the valuation, all other things considered.
I love that their cost of debt, they're going to have access to cheaper money now. And this is such a capital intensive company that you're always having access to that money at a much half the interest rate is going to be so helpful for them if that's how it goes.
100%. And generally, as we kind of look at these companies, we think about the progression just of what companies are doing anyway. When you're new and you just kind of are starting out, you raise capital from partners. You go out there and hit the VCs up. They get ownership in the business, but you've got money to do cool things. Then you go public. You kind of swap out that VC or early partner money with public equity. This is kind of the lockup expiration we always hear. Now it's publicly funded companies. And then eventually, once you get larger and you get a little bit more established as an operating business, you tend to want to replace that equity funding with debt funding because it's a lower cost of capital. That's where we stand with Rocket Lab. That's what I think we're going to see in the next year or two. So to recap, the three things that I think investors should be watching that we just discussed. One, watch the space systems backlog related to the large contracts. Let's see if we see a pop here in the next year as Rocket Lab's going after larger and larger contracts. Two, the scalability of the business itself, especially around personnel. They're doing a fantastic job right now of getting more out of their employees as they're kind of leveraging the work that they're doing in the fixed assets they already have in the ground to win more and more large contracts. And then 13, what's the cost of capital going to look like? What is the CFO going to be using to finance this business, which is very capital intensive going forward? I think in a nutshell, that's where we stand with Rocket Lab. This is still a fantastic business, a fantastic opportunity, a lot of growth on the horizon, no doubt about it. You're seeing all the exciting things that's going on with SpaceX right now. You see a lot of excitement from institutions for space type companies like Rocket Lab itself is. But again, let's be mindful. It's at least kind of say when shares are $150 a share, maybe there's a little bit too many expectations that are baked into like that. This is a very natural and very, very regular correction of the stock price that we're seeing here in the last month for Rocket Lab. Final thoughts, Heather, or can we wrap it up with that?
I just want to reiterate what you said earlier of that the stock market is not the same thing as this company, and the stock is not directly affected by this company. The company put these shares out into the market, and from there, the stock market does what the stock market does. And so, we're not saying like we don't believe in Rocket Lab. How the company performs affects the shares, but it's not a direct, like you're not buying these shares from the company at this point.
100%. So there's our takeaways on Rocket Lab itself. Speaking of the stock market doing what the stock market's going to do, on Monday we're going to take a look at what's being added to the watch list for Seven Investing here in June. We're going to be talking about two quantum computing companies, Arcit Quantum and Quantinuum, which have been getting a lot of buzz here recently. It seems like there's narratives everywhere about what a big deal quantum computing is going to be. Keeping in mind, I've been to the MIT tech conferences for the last 10 years. We've seen quantum on the radar for a long time here. It's finally getting a lot of optimism from the market. Let's talk about two innovators in this field who have got very quote unquote expensive valuations. Does it make sense to invest in them super early, knowing how much potential this field has got? So looking forward to talking about Arcit and then also Quantinuum there on Monday. In the meantime, today's Friday, June the 26th. I hope that you guys had a great week and I hope you have a great weekend going forward. We'll see you again on Monday.